How do you currently assess the overall health of Indian banks?
If you talk about banks' profitability, I think that is best in a decade with sufficient capital as well to support future growth. ROA for the sector is at 1% after 10 years, with sharp recovery seen in PSU banks as NPAs are the lowest. Asset quality is expected to be good in the medium term as we don't see any excesses built in a big way in any particular segment. Also, history suggests that asset quality tends to be benign after a cleanup that we've seen in the corporate sector over the last, since FY15, post the asset quality review.
What is your outlook for the banking and financial services sector in the coming years?
If you look at the credit or the loans or the advances space, so that has grown at 1.5 times GDP over 2 decades. So credit, as we understand, it's a key propellant of economic growth and also to fuel India's ambitions of becoming a $5 trillion economy. So banks and lenders, so including our NBFCs, are key beneficiaries from the low credit penetration that we see as a percentage to GDP, which stands at 80% today. And so that, I think that outlook is quite strong. And when we look at the other aspect of the financialization of savings trend from physical assets and shift of traditional savings, right? So basically from real estate and gold into mutual funds or capital markets, and also from traditional savings like fixed deposits or government schemes into capital markets. I think that's a big trend, which is also keeping the sector outlook quite buoyant. And the last bit when we look at investing is the valuations. Last but not the least, is the valuations are at a long-term average with superior return ratios. So when we compare to history, the returns are better off, whereas the valuation is still at average in pocket. So I think that's where we get the comfort for the sector or the medium term, and that's pretty much the outlook for the sector.
Preethi, how do you factor in regulatory changes when shaping the fund's strategy?
Sonal, given the systemic importance of the sector to the economy, naturally the sector is highly regulated. Regulations strengthen the frameworks and processes for the companies and make them robust. As you can recollect in 2023, when the rates went up in the system in the US by 0 to 5%, so we actually saw some of the regional banks undergo crisis periods. But I think even in India, we saw a very swift move in rates by 250 bips, but it was very well absorbed. And I would give that credit to stronger regulator scrutiny. So focus is to invest in businesses which have weathered any kind of regulatory events or any such macro shocks. And when we look at the longer term history, private sector banks have done a great job in weathering such events and eventually have come out successful by gaining market share as well in both advances and deposits.
Preethi, can you walk me through the current composition of your fund's portfolio in terms of key holdings within the banking and financial services sector?
Right. So given it's a sector fund, the benchmark weights play a key role in determining weights in stocks across segments. So if you see the benchmark, nearly 80% of the benchmark is in banks. And if you see our fund, 60% of exposure is in banks, which means 40% is in non-banks, including NBFCs, capital markets, insurance, and PSU banks. And when we talk from a market capitalization perspective, so nearly 100% of the benchmark is in large caps. But if you see our fund, 30% is in small and mid cap, and the exposure to large cap is at 70%. Thank you for watching this video.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.